Does it make sense to you that Google, Microsoft, Amazon, behemoths, very strong companies, are selling debt for 30, 40, 100 years at a time when we can't game out the next 5?
Well, I think that is exemplary of what I'm talking about here. I mean, I don't think, if you think about what Lisa just described, and I think Google issued 100-year bonds paying 5.8%, I think you would have to say, optimism, not pessimism, credulousness, not skepticism, are in the ascendancy today. And when optimism and credulousness are in the ascendancy, it gets hard to make investments that will produce what we call excess returns. That is to say, returns which are more than commensurate with the risk.
How do you invest in a company that is tied to some of this new technology, given that it does have such promise, with any certainty? How do you select the companies that are going to benefit?
Well, first of all, many more companies will be affected than just the AI companies or just the technology companies. But, what I said in the December 9th memo, I touched on the wisdom of lending money for AI companies or tech companies to invest in AI. And basically, I quoted my colleague, Bob O'Leary, as saying that you probably shouldn't. If you're going to put money into a company exposed to AI, you should probably buy the stock and get the upside if it ensues, rather than just lend the money and get a fixed return if they're successful.